The world economy is in peril, and the storm is gathering momentum. Jim Rickards, a renowned economist and investor, warns that if you're not prepared, you will regret it. In this video, I will share Jim Rickards' insights on the current economic situation, what you can do to prepare for the storm, and how to come out ahead. Jim Rickards believes that there are three stories about the current economic situation: the story of the Fed, the story of the market, and the reality. According to Rickards, the Fed believes that the interest rate should be high enough to lower inflation without any further interest rate hikes, which is currently at 5.25%. The market, on the other hand, believes that the interest rate is at 5%. Rickards argues that the market will experience a recession before the Fed raises the interest rate to 5.25%, and the Fed will then lower interest rates to deal with the recession. The reality, according to Rickards, is that the market is overvalued, and the bond market is warning of an impending recession. He explains that the inversion of the yield curve is a clear indication of an impending recession, and this occurred just before the financial crisis in 2008. Rickards is not optimistic about the future, and he warns that if the Fed lowers interest rates, it will not be to engineer a soft landing with economic growth and low inflation, but because they have tightened too much and too late. It's time to prepare for the economic storm that is coming. You can do this by diversifying your investments, reducing your debt, and building an emergency fund. Keep an eye on the bond market, and if you see the yield curve invert, it might be time to move your investments into more defensive positions.